Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're here now on Tuesday, the 29th of November, 2022, and we're just after 6:50 p.m. And I want to say congratulations, U.S. soccer team. Nice game, beat Iran. It had nothing to do with Iran. It was another team that they played. Game well played. Listen, you only beat them by one goal. It was a game well played. It was fun to watch. Okay. Tomorrow is going to be an interesting day because we start with the Fed chair, and he's going to give us what he thinks. He'll come out with a prepared speech. It's never the prepared speech that moves the market. It's afterwards in the question and answer as he fires from the hip and answers the questions. I don't see how he deviates from ultimately staying with the theme. The Fed, and he, specifically he's data dependent. That yes, things are starting to wobble. Will they gain momentum, or are they going to wobble back to the upside? Don't know. Labor's certainly a problem. They want to see it down. We get the jobs report coming out on Friday. They're looking for 200,000 jobs. That is a decline. We get CPI coming out soon. That's going to be important. We get jolts. Now, the jolts, which is normally not all that important of a report, has gotten a lot of importance recently. People keep looking how many ads are running for how many people that can grab those jobs, and they're extrapolating that to tell you is the market weak or not. We then have coming out this weekend, OPEC meets. What are they going to do? Because they want to defend price, and price has been on a decline in the Brent oil, and that's got to be of concern to them. The economies of the world have been weakening, not strengthening. That's got to be of concern to them. So where do they go with it? As for Russian oil, Russia's got its voice, but it's got 3-4 big clients, and if they don't need the oil, there's a new problem for them. They go into what's called a shut-in. Number two, on that thinking, where's the cap from the European Union? They don't seem to be able to get this done just yet. They have to, otherwise you run into even a worse situation by, I think it's the 5th and then the 9th. You have 2 dates that you got to get this done by. All right, so I came into the day and I had positions that were basically, I had been bearish the dollar. Knock on wood, I read the markets right first thing this morning when they were way down. Got my clients in good shape. I was not a winner today in the Dow, and I walked away from the trade, all right? So I don't mind telling you, hey, this is great, but I want to be the other guy saying, no, it wasn't a great day today. I was under the gun all day, and I made the best of a situation that I didn't like. That's okay. Came out of it in one piece. Not every trade's going to win. If it did, I wouldn't be here. Unlike people that come, I crack up when they go on my Facebook account and YouTube as we put everything up, and they go, I'm making $16,000 a day. I'm making $64,000 this week, and you can too. If you're making that much money, why would you tell somebody else how to do it? I mean, at the end of a month, you got $250,000. You're just up the numbers, and pretty soon you're going to be making $1 million a day, and you'll be the richest person in the world. We know it can't happen, but that's how they want to do it. And that it's not my fault they get up there. It is the hosts of these sites. And they should stop these people because they come in with rogue names and it's not good. We're trying to do real business there for you. So what do you do with this becomes the big question. And that is the hardest thing. The market's going to make you wait. I swear it's going to do that another 2 weeks. As you got to figure out what the FOMC is going to do, but it won't be the full 2 weeks. Once you get these jobs data, the jolts, the jobs data, the PCE, and then the CPI, you should be able to formulate your plan. The Fed will follow what that is doing. That's what I truly believe is going to happen. And if you don't believe me, you don't think this market's just gone sideways all of a sudden? If you don't think that's sideways, let's look at this chart together. When's the last time you saw that type of action? Just recognize it. That's part of what everything's about. When I look at the micro mini S&P, we haven't broken the pattern of higher and lows, higher highs. That's bullish. The support's ultra clear to see. It's the 100-day average and the 18 in red. The resistance is the 200-day average. The Bollinger Band is too far away. But the longer you go this sideways, those bands, how do I put it? They're tentacles. And they come wrapping around the market, and they'll suck the volatility, and that's pretty much what's going on. Now, that could pick up tomorrow when the Fed chair speaks, and it certainly's got the potential to pick up in volatility as we get into the rest of the week with the JOLTS data. I think that comes out Thursday, and then the jobs report on Friday. You've got to be watching those. Momentum, you're overbought. You lost the embedded reading opportunity. Now, you don't want to be hanging around that market. In the NASDAQ, you're back to neutral, the 18-day average, no trend at all. The Dow lost the embedded reading, had to come out. Got a reading here of 74.81 now. If we come back and we take a look at where the settlement was today, let's get back to that, 77. So once I'm under 79 and it doesn't immediately pop, I walk away because the odds favor. Doesn't mean it has to happen, but the odds are strong. I mean, if you understood the game of blackjack and other games, it's odds playing. It doesn't mean the cards are going to come your way. But if you play it long enough and you do it, you have a chance. I didn't say you'd win. I said you have a chance. There are people that make businesses, but poker's a better game for that because that's a lot more skill level, I think, than blackjack, and I'm not a good poker player. But you look at it right down here, that should be the support zone. Are we trending? We are not. I think we're in a holding pattern. Russell, the same. Do you think that's a trend? If you do, congratulations, because I don't. And doesn't mean you're right, not right, and I'm wrong. It could easily be that. But I'm not seeing it. I'm seeing a market that is marking time. It's waiting now in these markets. So these are not the markets, I think, that the pros are going to put big money in right now. I think they're waiting. They want to see if we can get 2 periods of wobbles so they can start placing the big bets as to what they think is going to happen. But if this one shoots back up, it means you're not there with the trajectory that you could start figuring on one way or the other, and you'll be saying, where's that lag and what's going on? In the VIX cash, you had lost the embedded reading, but not by a 21 number. So, and I mentioned this today. I wish this had been that. Then I would have had a better edge today in the Dow. As it turned out, I made the best I could out of a bad trade. But I was hoping this was give me another edge. It didn't. Now, if it's down tomorrow, that's bullish the stock indices. So got to see what tomorrow's going to hold with it. Then we come over to the T-bonds, and they're still embedded. So until this number closes under 79, the pros are buying. If you were sitting next to me, I'd say, why? Maybe you should be waiting to see what's going to go on with this. But they have been. If you get a reading under 79, you could easily pull back to the 18-day average of closes. In the 10-year note, you lost or you're losing the embedded reading. Let's go back, if we could, here and see the settlement today. It was 81. It was still. The numbers are over 80. You're losing it tonight. And if it stays lost, then the odds favor. You're going back to wherever that 18-day average comes in. In the dollar, you had lost the embedded reading. I got up at 3:30 today, and I'm looking, and I'm waiting for my clients to waken. I put out the 5:30 update, and I'm going, at the market. I want you to cover short positions in this. It's all on video, so I've got the video so I can prove what I'm saying. And thank God, because it was near the lows of the day, not where it's at this point in time. And I was quite happy to make the best of a bad situation. It made some money, but not what I thought it was going to do. It just wasn't a good series of trades. Euro. Well, when the euro lost the embedded reading here, I wanted no part of it. But what I should have recognized, and I said it yesterday, I'm pissed at myself. You got to that 200-day average. The first time you hit those 200-day numbers on the down or up, it's like you hit a brick wall generally the first time. Yeah, there could be a situation where it goes through it a different way. They're far and few between. And because of the weighting, 40% of the dollar, and this makes this up, should have recognized it quicker, okay? Just got by me. I won't make that mistake tomorrow. I might make it next year. In the British pound, you're losing the embedded reading. So if it loses it, probably settling back here to the 118 area. This has been a nice rally, but it looks to me a little old. I'd be careful with that. In Bitcoin, so now the market is saying, okay, I'm coming up. Is the worst behind Bitcoin? It could be. We've had a series of firms declare bankruptcy. Another one was a BitFi, I think, today. They declared bankruptcy. I'm reading about how FTX came unglued and what was going on. Tomorrow, finally, the gentleman that ran it is going to be out in public talking, and he'll give his side of the story. But when you lose billions of dollars of people's money, something's going on bad, and this is not going to end well for him. That's my prediction. I remember the early days of the commodity markets. That's why. Remember, I was there in the 60s, late 60s when it began, and it was cowboy time. The limousines would be outside, and I'd go, why are these guys making so much money? It's a whole different industry at the beginning. Go back into the stock market in the 20s during the heyday on the floor there. See how they were operating, and these guys. You strengthen this business, all of it in finance, by regulation. Very important, very pro it. We all hate it if we're registered brokers in one way or the other. You got to comply more and more. Sometimes it's very hard to do your job. But at the end of the day, it's about protecting you. I'm for that. As you can see, the resistance point right here, the 18-day average of closes, okay. So you went through a selling wave. That doesn't mean it's ready to go up. It might be. It doesn't mean it's there just yet, but it's certainly not a spot you want to be short now. And I keep hearing people calling for 10,000. That chart's not saying that at this point. Here's your differential between Brent and WTI. That thing has come in a whopping $1.50. That's a lot on a $7.50 difference. What is that, 20%? 18% in that zone? That's down a lot. That has all come together. And as you could see, if I'm Saudi Arabia and I'm going, well, let me just see. We were here at 90. I said, let's cut 2 million barrels. And the market since the last OPEC meeting, we're down another $5 or $6. Maybe we have to cut some more to make this market understand. I can see that that's the argument they're going to have, all right? I'd be having that argument in their shoes. They're not your friend. They want higher prices. Understand what they want to do. So we'll find out if they can sway that or not. As they go, so will WTI oil. It's been in a downtrend, but these are very oversold markets now. The same thing in heating oil, in fact, popping back up. Did it ever have the embedded reading? So let's look together. If we come here, both numbers were under 20. Both were under 20. Both were under 20. Not there. So you had 3 days in a row. And what did you do? Today being right here. This is today. You didn't lose the reading then. You're losing it going into Wednesday trade, which isn't the same as losing it. You got to get more than that. But it's certainly an area that down here where I think the pros covered. Do you see where I'm going? I think they covered here. I think this was extra gravy. Nice, but that's what I think it was. And I think that the combination of the 200-day average and the Bollinger Band, very important. Nat Gas, the same thing. You're up to that 200-day. Yes, you got over it, but you've been coming right back to it. And that's the importance of understanding zones. It's like you're saying to me, well, I want to buy it over that. And I'd be going, why? And it's exactly what it is. So you put it all together, you try to come up with game plans for yourself, and I think we have a way for you to do it right here. It's in front of you. It's going to come to an end, the Cyber Week sale. All you need to do is put your cursor up here. You'll be able to see what we're offering, how it works. You get any one of these 3 courses. Just let us know which one after you sign up, and away you go. I would expect, in talking with my IT staff, that the outside day course will be ready in about a week from now, week and a half, no later than that. So that's coming out right away. Be ready for it. And I think that because it is a pattern we see so often on charts, you want to see what I'm talking about with it. So take advantage. And I'm telling you, all the prices are going up in 2023. I'm Ira Epstein. You have yourself a great day. You take care. I'll see you tomorrow.